What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, May 14th. All right, guys, Nvidia stock here today up $5.21 a share. That's plus 0.58% in regular trading hours. It's down a little bit here in the after hours. Listen, as always, guys, the volume is going to be very low in the after hours. So wherever that may end up here tonight, just a little bit of time left in the after hours as of the recording. Take that with a grain of salt. Let's look at this thing looking ahead to tomorrow. We're going to take a look under the hood at the volume profile, see what kind of bias we can pull out. We're going to take a look at the psychological levels. Big money's watching it, so by default, we need to be as well. Implied volatility, expected move for tomorrow, and the directional bias for tomorrow coming out of the chain. So listen, let's get started here with the volume profile on the 5-minute chart. Listen, guys, I'm taking a poll in the comment section here. Let me know if you're bullish or bearish. Curious to get a feel for where the community sits. So let's peel back that onion and see if we can pull out any bias here out of the volume profile. Now, clearly, guys, first thing that catches my eye, what do we normally expect off the open? Right? Normally, we expect a high volume opening bar and then really quickly a fade into much lower volume. The bearish volume, at least the volume on these red bars, right? We had some wicks on the candles, which tells me that some of that volume to pump up this volume was buying volume, right? However, we held on the red bars, we held high enough volume 20 minutes or so into the day, which is not very contextual. That's not incredibly normal. So we did see a little bit of bearish bias off the open here on Nvidia. Heading through the day, we got some green pops. You know, unfortunately, we never really got enough to really show any substantial bullish bias, at least in midday. Here, there was a little bit, okay, a little bit of out of context elevated volume to the green side, but not anything tremendous. Moving through the day, a very normal close, increasing volume into the bell, and then that big rebalancing bar, which I like to ignore because it's a lot of buying and selling all happening at the same time. Usually triggered by algorithms immediately by the closing bell, and you can see very little actual movement. So don't let that big red bar scare you, but tiny amount of bullish bias there in intraday, and you know, definitely a little bit more bearish bias immediately off the open here on Nvidia today. Now let's take a look at those self-fulfilling prophecy psychological levels here starting on the 30-minute. You can see here an interesting look. And hey, by the way, if you are new here, NVIDIA is a daily upload, guys, so I appreciate you subscribing to the channel. I really do. My goal here is 10,000 subs, and I know we can hit it, but not without your help. So I appreciate it, and I will keep the NVIDIA videos coming. Now, looking at the 30-minute chart, I like to keep this very simple, right? Because I want only what has the most amount of eyeballs. Now, today, you guys remember the weekend video? We headed into the weekend barely holding on to these two, the 50 period and the 200 period, the white line and gray line respectively, barely holding on to them as support. Today, we tested downside. It was incredibly sloppy. A lot of volatility off the open, but we held them both as support here today, and they're essentially at the exact same point. That makes tomorrow really simple here on the 30-minute. Bulls, any downside test of those moving averages, I want to see it hold as support. I don't care what volume we tested on as long as we bounce away on elevated volume, above average volume for the time of day that we were to see that if we did. Now, or if we do more so. In doing so, that would likely yank the 50 period up higher than the 200 period, so that's likely what that would look like if that were the case tomorrow. Bears, really simple for you guys. High volume downside rip through both of those at once. Retest whichever one happens to be lower at the time, would likely be the 50 period, and then reject hard off of high volume. That might also set you guys up for a downside break of 9, but we'll talk about that when we get to the daily. Now here on the 4-hour chart, you guys can see that Nvidia currently sits a little under 2% away to the downside. So to be more specific, minus 1.9% is how far that 50 period is to the downside away from the current stock price. Listen, guys, bears, getting beneath the 50 period and the 200 period, in order to do that, that would take probably about a 2.75% move, if not a little bit more, maybe a 3% downside move to get through both of those. That's ideally what you bears want on the 4-hour, but bulls, All I'm watching on the 4-hour is if we see a test of the 50 period, then this 4-hour chart is back in play, and I would just want to see that hold so we can maintain both of these 50 and the 200 period on the 4-hour as support. Now, most important chart of all, the daily. You guys see this? The 50-day moving average is currently right at around 878.37. That's a moving average though, so I encourage you to have that on your chart. But there is a much more immediate story here on the daily. With the daily, guys, we like to keep, we want to look at the most obvious story. The one that is the most clear to the most amount of people. Do not overcomplicate the daily. I think that's a huge mistake. And beginners, that's good news for you guys, though, because you can see the easiest thing, and that's really what we should be looking at anyway. That self-fulfilling prophecy mentality. So, and if you don't know this, that's okay. But what's the most obvious story here on the daily? If you guys want to use this as an exercise, pause the video and go down and leave a comment and hold yourself accountable. Okay, what is it? Right, what's the most obvious story here? It's $900 a share. Right? It's really clear. Each $100 level on Nvidia in this price range is a very obvious psychological area, therefore it will turn into a technical level in most cases. You can see 900 is an obvious psychological level, and therefore it is turning into or has turned into a technical level. That also happens the other way around. Now, tomorrow, bulls, really my number one priority on Nvidia is to hold $900 a share as support. That's really it. Because we've talked about this a lot, guys. What does holding 9 really help us do moving forward? Well, we know that there's not really a lot of technical levels moving all the way up to all-time highs and then, to $1,000 a share. That's like open sky as long as we can hold 9. I mean, maybe 950 is a small psychological, sure, but I'm basically looking up to $1,000 a share if we can just hold 9 and then use it as kind of a power trampoline to just push our way up the next $100 to all-time highs and $1,000 a share. It's the obvious story there. But bears, if you guys can crack 9 to the downside, you give up that as a psychological level, you flip that into resistance. Then you have the 50-day moving average staring you in the face at around 878, at least as of right now. But if you can break both of those to the downside, that's a really big move. That's a big power move out of the bears. Bulls, that's what we don't want. All right, now applied volatility. This is compared to the last 3 months. It's sitting in the mid to high range. Compared to the last month, okay, maybe month and a half, it's high. So understand, if you're buying new options, you are paying a bit of a premium as far as Vega value in those options. Okay, but if you bought options while IV was lower, understand that you're currently holding a little bit of a Vega pump that you've benefited from. And that goes for calls or puts, by the way. Remember, these are complex instruments, right? They're not, it's not just like, okay, I'm going to go long stock or go short stock. There's a lot that goes into the pricing of a contract. It's important to understand all the different factors, the Greeks. Now, expected move by tomorrow. We do not have the luxury yet. I think it'll likely come in the next decade or so, but not yet. We don't have daily expirations on Nvidia yet, so we have to do a little bit of educated guesswork to really try to understand this better. And by the way, most people aren't going to do this, so I think doing this is a relatively large advantage. We have, the next expiration is Friday, May 17th. The expected move by Friday's close compared to today's close is plus or minus $36.32 a share. Now, if we divide that by 4 trading days, Tuesday, Wednesday, Thursday, Friday, trying to get Tuesday, and then we take that number, because, that number is $9.08, that assumes 4 green days or 4 red days in a row. So what I do is I add back 50%. That changes depending on the market. Right now, I'm using 50%. It seems to be the most consistent. And we get an expected move for tomorrow's close compared to today's close of approximately plus or minus $13.62 a share. That is about the 1 standard deviation expected move that the market is pricing in. Now, you might be thinking that's like oddly specific and doesn't have any directional bias. That's bizarre. What that is, guys, is again, it's the 1 standard deviation volatility expectation. So 2 things. This isn't where we come to get directional bias. We do the entire analysis and then we'll look at volume here in just a second to get directional bias. But this, if this is ignored, You are ignoring a massive part of trading options. It is extremely unlikely you'll be profitable, even in the midterm, let alone the long term, if you're ignoring volatility, trying to trade options. You are half-assing the process, and you're an excuse of a trader if you're trading options with only directional bias. I'm hard on you because I want you to be good at this. And listen, guys, it's not difficult enough to ignore. You know what I mean? Like, give yourself more credit. You can understand this stuff quickly. It will not take months at all. You can study it for a weekend and know the Greeks inside and out. And it is more than worth doing, because the truth is, the people that aren't here right now, putting in the work, putting in the time to educate themselves and get better every day. I see some of you guys in the comment section. You're here like immediately every day. It's ridiculous, and it's great. I love that you're here. You're putting in the work. That's important. But it's such a small investment to really understand. And believe me, guys, a lot of other people are going to ignore it. It's like a gimme advantage. Take it and run, because I don't know how long that advantage is going to last. I really think eventually that like people are going to catch on that they need to get better. And when the floor gets better, like when your competition gets better, you're going to have to get that much better. So you might as well take every gimme you can get right now. And that like automatically puts you in the top 10, 20%, at least of retail traders, right? So, do that. Study the Greeks. Yeah, I want you to keep watching the videos, but like I'm going to try to provide as much value as possible so it makes sense for you to watch these every day and it's an actual good use of your time. So all that to say, the expected move with a little bit of educated guesswork for tomorrow, again, Tuesday's close compared to today's close, is plus or minus $13.62 a share. $13.62. Now, first of all, again, it's not the assumption that the market will be correct every day. It's just the one standard deviation expectation. So whichever direction you disagree with that on, if you also have a strong directional bias, that could potentially be a position for you, right? You kind of want to disagree with the market so you can actually position yourself and get in the game. Now, directional bias. Last thing we can do here for that, volume. We had about 797,000 contracts traded here today, 459,000 calls, 337,000 puts. Now, if we go one step further, break that down by time frame, the 0 to 20 delta range, the short-term speculators, 160,000 calls and 146,000 puts. A little more undecided when you go short-term, still a slight bullish bias and a little bit of a heavier bullish bias on the overall ratio. Listen, guys, thank you for being here. Thank you for putting in the work. I appreciate it. I appreciate you guys watching the videos. And again, to encourage that behavior so we can all benefit from these being out there, I will continue to put as much value as I can in these every single day. Otherwise, if I wasn't doing that, like if I would, the way I think about this is if I wouldn't watch the videos, then there's not enough value in them and I just wouldn't make them. It just wouldn't be a good use of my time. But in putting in the value to the point where I would, looking in from outside, I would genuinely watch these, then that feels like a wonderful use of my time, whether 500 of you watch this or 30,000, whatever. Because retail traders need to get better, and we are getting better. And I think at some point in the near future, if this trend continues of obsessive education, which I'm seeing and I'm loving it out of retail, perhaps, retail will actually be respected in a way that retail really never has been in the near future. So listen, thank yourself for putting in the work. I appreciate you being here, and I'll see you in the next one.